Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I'm out in the country. It's a rainy night. I have a great stereo here, though, and hoping to get a good pickleball day tomorrow morning. So before I go do my taxes, interesting day. But I wanted to give you something a little bit different here that isn't a big uh, upside, at least potentially at the beginning, but I still think it's a really good diversifier in your portfolio right now. It's outside of stocks, and I think it could give you some stability in your portfolio, some income, and the correlation with the S&P 500 would be fairly low. So let's get into it. I'm talking about bonds. I'm talking about treasuries. This is a long-term chart. I don't know, 6-year chart of the 30-year treasury. And I did pretty well with this back in 2020, 21. Saw this big head and shoulders top, big bearish formation. Told the firm I was with to get out of bonds, that they were going to go down a lot, and they did. The price projection based on this uh, was basically from 155 down to 125. So what is that? 20% loss of principal in bonds, and which is a lot for a fixed income investor, and a lot more from the top of this pattern. So, buy and hold, is it really the way to go? I don't think so. So do you have to do all or nothing? No, of course not. But prices even went down lower than 120, 125. They ended up bottoming at about 110, at least so far. Am I calling a bottom in bonds? No, I'm not. Do I see some potential here? Yes, I do. How much it'll be, I don't know. But you can see on all these lows here, we had higher lows on our RSI. So this is flashing a big caution sign. Beware of Beware, a change of trend is coming. And in this case, it would be down to up. The magnitude, I don't know, but there is the potential for some upside here. So that's what I wanted to show you on this longer term chart. So let's look at a shorter term chart. This is a daily chart. So this just goes back from October till now, 6, 7 months or so. And each one of these bars represents a day of price action. So prices were going down, and we have no positive divergence on the daily, but what we do have is the possibility of an inverse head and shoulders pattern. First, we broke down out of a triangle telling me to get out. If I had any bonds, I don't remember back then, but if I did, it was minimal because of the bigger pattern. And but now it looks like we're trying to base here. So we got a left shoulder, a head, potentially a right shoulder here, potentially, which would be an inverse head and shoulders, a bullish pattern suggesting a reversal here from down to up. And it's just potential because we haven't broken out of the neckline, which comes in right around, well, let's call it 93. But what we do have just below us is a rainbow convergence of moving averages. So this should be support right here. And what I like about these kind of convergences, these confluence of moving averages, is that uh, when these lines touched, prices came back to that. And so this would be what we consider a type 2 convergence, which means probably nothing to you. But what it means to me is that if prices can hold this, it promises another high, a higher high than we had here at 92.42, which isn't a big move, but it would break us out of this inverse head and shoulders pattern And if that happened, if we could close, let's say above 93, you measure from the bottom of the head to the neckline and you project that upward and you get about 100. So I'm suggesting buying this now, because if it breaks below this tomorrow, I'm out. I bought today, uh, and I would buy tomorrow if it was up a little bit. I would wait till it closed if it opens below, because closing prices are what matters. So if it broke in the morning and then by the end of the day it regained this confluence of moving averages, it would still be intact. So we got to look at closing prices. So I think the reward to risk right here is really pretty good, because you're talking about 90, I'd be out. So you're talking about 2 points to get 8 points. So your reward to risk is about 4 to 1. And again, when we go back and we look at, see if I can do this. I'll look at this big pattern. I mean, this is a big positive divergence over 1, 2, 3 years. So that is suggesting not just this move up. We're getting a retracement of that initial move, but I expect to see a little bit. I expect to see higher here in the short term. I'm not calling for a new bull market in bonds, but I do think that the push could be greater than people expect. People are not very bullish on bonds right now, which I like. So again, this is the pattern I wanted to talk to you about. We're looking at possibly 10% upside with a 3.84% dividend yield, I believe, and you get paid monthly a portion of that. So, if you got 80% of your things in stocks, you should have some money. They have 5-10% in some, the 10-year ETF, IEF also looks like this. So you could diversify amongst those, but you should have some money in bonds also now. And it doesn't have to be a huge amount, but it can diversify you. You have a little bit in commodities, hopefully in gold or copper or one of those. And so that was my suggestion tonight. Nothing too exciting, but I think it adds to the portfolio, and it gives us a little bit of protection. But forget the protection, it also gives us some upside here. I'll take 10% any day, and the market's pretty overbought right now. Please like and subscribe. Thank you for watching. Chart Built Wealth, profitable investing with technical analysis. Have a great evening. Good trading tomorrow for you.